Well, thank you for staying tuned. This is Business Nigeria with Tolulope Ogunjobi. Now, despite the global economic challenges, Nigeria's tech ecosystem continues to thrive with notable regulatory changes in data protection, digital advertising, and social media platform regulation. For instance, the ICT sector contributed 17.89% to Nigeria's total GDP in Q1 of 2024, up from 17.47% in Q1 of 2023. An indication of the sector's resilience and potential. In the fintech space in 2022 alone, tech startups in Nigeria raised an estimated $1.3 billion in funding, a slight decrease from $1.5 billion raised in 2021. Well, let's get talking. I introduced him earlier. He's a startup coach and investor who also doubles as the founder of Bowling Labs, Mr. Idowu Akinde. Good afternoon, Mr. Akinde. It's really, really good to have you on the program. Thank you for your time.
Thank you, Tolu. Always a pleasure.
Well, I think I need to start on this landmark, of course, by Lagos. Always as usual, the government is putting together 1 billion naira that is for to propel startup innovations. And it seems like the startups for innovative and creative ideas seems to be on the front burner at this time. What do you make of this move by the state government?
It's an excellent move. And there's no other way to say what it is than to say that it's a good move, right? People like myself have always said that the tech sector needs more public sector support, right? I've asked in the past for things like special tax breaks, okay? I've asked in the past for things like, grants, access to funding like this, access to funding, not just direct funding from the government, but sometimes access to special corridors of access to venture capital and other types of sources of capital, right? So this is a very, very great move. This is an excellent move. In particular, I'd like to give special kudos to the current commissioner for Innovation, Science and Technology in Lagos, Tubosun Alake. Great move. I saw a couple of things there that I hope are as great in implementation as in this landmark move, which is one, a reconstitution of the board or the leadership of LASRIC. LASRIC, alias RIC, stands for Lagos State Research and Innovation Council, something like that, right? And this is the agency that through which the 1 billion naira startup support fund will be channeled, right, to qualifying entities. So I saw a couple of things there. Number one is that the board or the leadership of LASRIC has been reconstituted. And the new members of the board are people in the tech industry, right? A couple of venture capitalists, a couple of ecosystem leaders, people that we know and we trust and we know that have built businesses, know the challenges of building a tech business in Nigeria, know that even if you want to give someone funds, these are the things to give people funds for, not these other things. So I really, really, really have high expectations. I hope that in a few months and years, we will start to see perhaps disbursements, and in a few years further down the line, we'll start to see a really solid return on investment, both in terms of products that are available in the States and in the country, as well as impacts in people's lives. Thank you very much.
Area of focus to me, or area of interest, is also something that is very important. Mr. Akinde, you agree with me. These days we have innovation in hardware, climate change, circular economy, software development, fintech, agri-tech, and all of that. How well are our guys doing in all of this space?
Okay. I will have to use an analogy.
Go ahead, please.
To explain the importance of certain sectors. So it's no news today. This is 2024. Over the last 7 to 8 years, the tech sector, the tech space in Nigeria has, actually in Africa, has experienced a boom before the dip last year, right? Called the funding winter. But that was due to a global thing. But before that dip last year, there was a sharp rise in the amounts of funding, usually denominated in USD, but that's another matter for another day, the amounts of funding that was raised by African startups went from something less than $1 billion to about 6.3 billion, I think, in the penultimate year. And that was a great achievement, right? Everybody on the continent is still very small when you think about global standards, but at least by our own history, it was record. Now, about 70% of that huge meteoric rise was because people were investing a lot in fintech. And this is where I said I would need to draw an analogy. Fintech has received a lot of funding, right? And that is understandably so, rightly so, because fintech is something that you regard as kind of like an operating system for an economy, right? Every economy depends on people making payments for goods and services, and other people receiving payments for goods and services. So no matter the sector, no matter the location, no matter the demography, every economy is built on efficient means of making and receiving payments. So the focus on fintech is justified, is understandably so. However, in the same vein that I described fintech as something that you might call an operating system, kind of like your iOS on your mobile phone, if it's Apple, or the Android OS on your other type of phone if it's Android, right? So it's a fundamental thing, and then you build other things on top of that. However, what people are starting to realize is that there is a second component of what you might call an economy's operating system. Fintech alone is not sufficient. We also need to pay similar or greater attention to energy. So it has been discovered that when you look at HDI, the Human Development Index, there is no society in the history of humanity that has ever advanced without fixing energy. Okay, so it is when you fix energy that human development indices, health, education, and other indices of human development improve. So there is a need for us to pay as much attention, if not more, than we have paid to fintech over the last 7 to 8 years to energy. And if you're doing energy in 2024 and beyond, it might as well be renewable energy. That's the advantage that we will have over the rest of the world when they were building non-renewable and other types of energy. If we are going to start building infrastructure now, it has to be renewable, right? Or upgrading our infrastructure. So energy poverty really, really, really has to be fixed. For me, if I were governor for a day or president for a day, I would declare a state of emergency on energy. Energy poverty, Africa. In fact, not just Africa. Sub-Saharan Africa is the only segment in the world. There's a map that I wish I could show you right now, but I don't have it. There's a map, a global map. Sub-Saharan Africa is the only section of the world that is still suffering from energy poverty. And we need to fix it. Otherwise, all this talk about economic advancement is rhetoric. So if you ask me that what is the next hot sector in Nigeria, Africa, Sub-Saharan Africa, the first thing on the top of my head is energy. Because just the same way you need fintech as an operating system, everybody must pay and receive funds, right? On the same way, everything that people are building are on the backbone of a solid energy infrastructure. Mobility will work on infrastructure. Fintech itself will work on infrastructure. EdTech, health tech, climate tech, everything will work around infrastructure. So energy infrastructure. So for me, the hottest sector for anybody to invest right now is renewable energy for the African continent. Thank you very much.
Brilliant stuff as usual. Let's talk about venture capital. We're always interested in the money. The money must come in. Let's follow the money. And we expect that many projects should be funded. Yes, in Nigeria, particularly in the tech space. There's a lot of opportunities here. What's the state of VC at this very time as we move forward in 2024?
Okay, thank you very much. Very, very good question. As you know, the other part of me is that I'm launching a venture capital firm. I can't say more than that because I don't want to violate something in that space called general solicitation, right? So I can't say more than that for now. However, I made reference to something earlier. I said that there was a dip in funding last year and a little bit of, towards the end of the penultimate year and last year, throughout last year. And it was a global thing, right? So it wasn't localized to Africa. Yeah. It was a global thing, and there was a dip in venture capital funding, right? There's a lot of factors that have been attributed to it. But the important thing I want to say is that that winter, quote unquote, has started to fade. So it's often fondly referred to as, well, not fondly, referred to as the funding winter. And that funding winter has started to recede. So what we're seeing is that from Q1 this year into the current Q2 and beyond, we are seeing renewed interest in investments. And that's from majorly, because traditionally a great percentage of the funding that has powered African startups has come from beyond the continent, from off continent. This is the same sentiment. Those people that were withdrawing their funds throughout last year are starting to call up people like us, local investors, local ecosystem leaders on the continent, and saying, hey, what do you think about this? I'd like to come visit, right? I have somebody visiting next week, so that renewed interest is showing up again. So there is an uptick in there's an uptick in interest for investments, and therefore I envisage that in the next few months we'll be gradually going back to a healthy investment landscape. However, I have to say something. I always say that capital, whenever it is deployed without being accompanied by coaching, is suboptimally deployed. And that's the mistake that we made in the previous, quote unquote, wave or generation of funding, right? We saw the huge interest from global investors on the continent, and we saw money and we said, hey, let's go and catch this money, let's go and capture this money, capture this investment, capture this investment. What has happened is that we've done a lot of investment without, number one, local due diligence, and number two, matching that foreign investment that is coming in with local expertise and local mentorship. The problem is that you can import dollars into an economy and just convert and it becomes Naira, right? But you cannot import the nuances of running a business in Africa from Canada or from North America or from Europe or from anywhere else around the world. You need, even when you're bringing, whether the source of capital is local or global, you always need local intelligence, local mentorship, local expertise, local advisory that follows that capital in order for that capital not to, number one, be misused or be suboptimally deployed, right? So that's what I want to say. The second thing is, so that's what I want to say. The first thing is we must always match capital with coaching. So as capital is starting to rise again, capital availability is starting to rise again after previous funding winter, we must be intentional to match it with local nuanced coaching. There is a way to do business in Nigeria and Africa that is not obvious to these providers of funders around the world. That's number one. Number two, every HNI, every high net worth individual in Nigeria today in natural conversation mentions Flutterwave and Paystack, right? And people just mention them. But the question I have for them is, where were you when those gentlemen, when those founders were pitching and looking for local investors to invest, but they had to be spotted by foreign investors. Their value had to be validated by foreign investors. So at Bullion Labs, we're doing something to grow local investors' knowledge and mindset as to how to spot promising startups and investments, even from an obscure stage when they are diamonds in the rough. Thank you very much. Great question. I hope that has answered some of the points in that question.
Of course, always hitting it directly where it should be touched. Now, let's wrap up, but do this in 2 minutes. What is your outlook for the entire sector? Yes, I know a lot of work is being done, even by the minister, and of course, agencies on the rim. But what is your expected outlook? Let's wrap up on that note.
I'll tell you, I'll tell you my sincere, honest opinion. I think that we're just at the beginning. We're just at the beginning. I'd like to liken it to being on the tip of an iceberg, right? Where whatever we've done, whatever we're doing right now is still very, very tiny. And we will really, really, really see the magnified, amplified effects of all of this tech ecosystem work that we're doing now in about 20, maybe 30 years. The reason is, I always ask, I asked somebody recently that, have you seen a corresponding increase in the quality of life for that matches the rate of availability of funding, for African startups over the last 7 years, right? 7 to 8 years. And the answer obviously is no, right? So that is an indication that there are a lot of problems to solve, right? The litmus test for knowing whether you have a saturated investment ecosystem, a saturated investment space or not, is whether the local problems in that space are being solved, right? So if people still have pains accessing energy in 2024, that is a ripe market, because whomever cracks that problem and provides a solution with a great user experience around that solution will go away with a lot of billions of naira and perhaps dollars. And talk about any space, right? So I always like to say the presence of problems in Nigeria and by extension Africa is the very evidence that this is the best place to invest, because those problems, each of those problems, is a gold mine in itself, right? So what's my outlook? I'm an incurable optimist. I believe that we should continue to iterate and not lose steam and not lose motivation until we find that combination of parameters, that configuration of parameters that enables us to solve people's problems and, capture value in exchange. Last point, for those that may be listening, there is, from the kind of work that I do, I'm a professional startup coach. This is what I do full-time. I help startup founders build enduring and fundable businesses. From the work that I do, there's something that we always like to say. The severity of a problem is directly proportional to the willingness of the customers to pay for that problem. If a problem is very small and sometimes it's difficult to argue the severity of that problem, then when you build a solution to that problem, it's going to be difficult to get people to pay because the severity is not high. But when you have a problem with a high level of severity, you will never have a customer that argues to pay for a problem that is severe in their life. So tell me the problem that is not severe in Africa. Therefore, we will build. Therefore, the field is green, the field is virgin, and the outlook is very strong. That's my position. Thank you very much.
Amos, thank you so much for your time, Mr. Idowu Akinde. It's really nice having you. Startup coach, investor, and he's also the founder of Bowling. Thank you so much, Bowling Labs. Thank you, and do enjoy the rest of your day.
Thank you so much, Tolu. Always a pleasure.
All right, then. Well, let's talk markets now, away from talking tech. Let's look at what is happening at the exchange today, and the market is still staying in red, 0.41% down. Effiong Gekop is live in the studio. Okumu Oil, John Holt, Con Hall PLC, NSL 10.